Kia ora. Welcome to Shared Lunch, brought to you by Sharesies. My name is Dan Brunskill. I'll be your host today. We're joined by Andrew Jefferies, the Chief Executive of Echelon Resources Limited, to talk about being a fossil fuel company and how it fits into the global energy transition. Before we get started, here's some important info.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Andrew, hello. Thank you for coming on the show.
G'day, Dan. Thank you very much for inviting me.
Hey, I was having a look at your share register the other day, and it looks to me like Sharesies users are approximately your fourth largest shareholder collectively. Is that right?
Yep, that's about right. And they're also quite an interactive shareholder, I think, in terms of people are actually watching things and buying and selling the shares.
So we're here in Wellington. Until recently, you were a NZX listed company called New Zealand Oil and Gas. You're still headquartered here in Wellington, but I think in May you shifted the company to the Australian Stock Exchange and rebranded as Echelon.
Yep.
Can you talk us through what motivated those twin decisions? I assume they're related. And
they are related in a way. The fact is, so there was a couple of things that drove the timing. One was that we looked to move to the ASX because, look, exchanges are places where capital comes together to invest in things. The NZX has been quite successful in things like Zero, is quite a tech exchange. The ASX is very much a resource exchange. There's obviously quite a large capital pool in Australia with their superannuation system. They tend to have a lot of mining and exploration companies, so there's capital available, and there's analysts and people who sort of understand our industry. So, for example, in New Zealand, we had no comparable companies. So I was the CEO of the largest and smallest listed oil and gas explorer, which is great. It's quite a fun anecdote. But the reality is that in Australia, I've got around about 65 comparable companies. So there's actually a pool of people who have a better understanding of the oil and gas industry.
So there are just advantages to sitting alongside similar companies. You can be compared to each other. Analysts that understand one will understand another, that kind of thing.
So as we go through the energy transition, that transition's going to need a lot of capital. And I think that the resource market that is the ASX will be one of the markets that provides the capital, that builds the projects, that do the mining and processing, that will build all the machines that are going to make the transition work. So, we want to be very much part of that scene, as we'll come to around the role.
And the name, Echelon?
So we're a very science-based, engineering-based company. We've got a lot of geologists. Echelon is a term that they use for things that are in a size order. So things like mountains, fault blocks, formations, geological formations are all referred to as on echelon. So it resonates to that piece. It's also about, to me, it's about the, where we're putting our focus in terms of looking at where those rocks are. So we're looking at markets where we see that there will be demand growth, that there's a strong appetite for hydrocarbons. And so we're putting our effort into those areas. The next thing is it's our values. We like to look. We have a pretty rigorous scientific team. It's not huge. We're not a big organisation. We've got 20 people, but we put some real rigour into our science, and we have some very robust and experienced engineers as well. So we feel that we're in an upper echelon in terms of the experience, and certainly having worked globally, and I have worked with super majors and the next level down companies. I don't think I have ever had as experienced and as motivated team as I've got here.
You mentioned in there about wanting to be more focused on the markets where there is more demand and more work to do. There's been a lot of talk recently about how New Zealand Labor government banned oil and gas exploration in 2018. And it seems like there's been a sense from companies like yours that there's not that much work for you to do here in New Zealand now. Is that the case, and was that a factor in the move?
Well, there's a couple of different sides to that. On the one side, there is certainly a lot of prospectivity in New Zealand. New Zealand has been underappreciated as an exploration venue, mainly because it's what we call a gassy province.
Okay. That doesn't sound good.
It's a gassy province. In the past, that wasn't good because it was a long way from things, and it was predominantly gas that you found. So Maui was a great case in point. It was, at the time of its discovery, it was the world's largest offshore gas field, but nobody really knew what to do with it, and it took a decade or so. I think it was discovered, in about 68, and it was about the end of I think it was about 1980 that it actually produced.
Right. People still wanted oil back then.
People still wanted oil back then. It was much easier to transport. Well, the world's moved on. And now, actually, the world is keen on gas. And a lot of countries are trying to reduce their use of coal, in particular, by utilising gas. So it's actually being a gassy province is no longer a bad thing. So we've got 21 sedimentary basins in New Zealand. New Zealand's the 5th largest continental mass in the world. Most of it's underwater. We've got a huge continental area. And of those 21 basins, we've had wells drilled in 5, and 4 of them have had hydrocarbons in them. Now, you say, well, you've drilled those basins and you haven't found anything. It took 38 wells to find the North Sea. And I think you would have a hard time putting a well in the North Sea without hitting something when you look at it. But the reality is that exploration is a numbers game, and you do end up with a lot of unsuccessful wells before you get success. So there is prospectivity. New Zealand is very underexplored. Even the Taranaki Basin is underexplored in global terms. The other basins, Canterbury, Great South Basin, even more so, they've barely been scratched. So there is prospectivity there. On the flip side, it's the oil and gas industry is, like any heavy industry, is not property development. We do not come in and do something and sell it on and make big bucks and with not a care. We come in and you become involved in a country. You spend tens of millions of dollars obtaining seismic, to spend hundreds of millions of dollars doing wells, most of which are going to be unsuccessful, to spend billions and billions of dollars developing infrastructure to then produce those hydrocarbons and to sell them. All at the same time as with the government owning the resource. So at no time does your oil and gas company own the resource. It's actually the country owns the resource. It can't be moved. You can't offshore it because it is where it is. So you then develop a multi-decadal relationship with a government and with a country, and that sort of thing requires a lot of certainty. So for investors to come in and put the money up to do the exploration requires certainty. So and I think that's a very long answer to your question, but the offshore ban, while at the time not a lot of wells were being drilled, we'd just had a big price crash in the 2015, so not a lot of wells were being drilled. The reality was that it was like putting a big signpost in your front lawn saying, bugger off, we're not interested in having you here. What then unfolded, and we knew about this, we had experience of this. We had a block off Canterbury that had a prospect, the Bark prospect, that we did a public report on, showing the impact that it would have, which was several thousand jobs, export industry, You would have got all the southern dairies off coal. It would have been you would have produced around about $1 billion a year in tax revenue, so about enough to run a DHB. We had that block. We were lining up with some international partners to come and get one of those wells stuck in it. And within a week, those international partners had gone, and they are not coming back. So they haven't come back at this point.
Even though you did have permission to explore there and work there.
Even though we were coming up to a block decision, and there just wasn't a great deal. Companies can look through, if they see a government setting that says we don't want you around, they can see through that they can go and spend that $100 million on an exploration well, but then you've got to develop. You've got that long relationship you've got to have with the country, and if you're not welcome, well, you're not welcome. So there is a look. It's been very it's been great to see the offshore ban reversed. The problem is that now with the Labor government saying they're just going to whack it back in again, what do you do as an international investor? What do you do? Well, you probably say, I'm going to go and spend my money somewhere else. So interestingly enough, at the moment, the country with the highest offshore capital spend in this coming year will be Norway, which has a very welcoming exploration regime. It's got a very high tax. It's quite a prospective place, so people do explore and find things. When they produce, they actually have a very high tax regime. But companies don't mind that because the risky part is the exploration. So the exploration is supported very strongly by the Norwegian government and has been for decades. So they've had a very stable regime. Similar to, up until the offshore ban, we would go around the world and say to people how similar the Norwegian and the New Zealand regime were in many ways in terms of stability. It's a difficult time, and it's one of the reasons why we've also looked at and invested outside of New Zealand.
What would it take to bring you back?
Norway's a pretty good example. The Norwegian government actually do support exploration quite strongly, not just in terms of waving a flag and buying lunches or whatever. It's real inducements to do exploration, and I think.
And is it supported across the political spectrum?
It does appear to be, because we've had Green governments and they still. They still provide the same support. Their regime has not changed over the decades. The UK has a very similar. The geology doesn't sort of take any regard to geographical country boundaries.
Right.
The geology is the same on the UK side of the North Sea. The UK over the last 30 years has played around with its tax system endlessly. And there's virtually no spend in the UK on exploration in the next year. So you got Norway, biggest spend ever, and the UK with virtually none, right next to each other, same geology. So
and that's just down to regulatory certainty.
It's just down to regulatory
tax,
certainty.
What you can explore,
Yep.
Which parties support what.
Yep.
Okay. If the ban hadn't been put in place, do you think you would have new wells up and running, a new site up and running today? What might an alternate reality look like?
I think there is certainly one, at least I know of one and probably two prospects that would have been drilled. Would they have been online now? Probably not. You'd need quite a lot of infrastructure to put them online. Would they have been 6 years further down the track? Absolutely. So it's a game where you've got the oil and gas exploration game is a game where you've got to run to stand still. So you've always got to be drilling more wells because it's a depleting industry. I know when I first embarked on my career in the early 90s in oil and gas, I had a lot of people say to me, well, won't oil run out in 2000? Okay. And it didn't. And I would imagine a lot of people even more people are probably getting the same message now. And I think we'll come to it potentially later on. But I think there is a large, we do need oil and gas in the system. Gas in particular through the transition.
Mm-hmm. So I really wanted to ask you about this, and I think lots of our viewers will be interested in this as well. Obviously, lots of them are invested in you, but another thing Sharesies hears from its investors all the time is that they're really interested in ESG and impact investing, and that's like a very popular genre.
Yep.
So it is interesting, I think, being a fossil fuel company, you provide a service, people need that service, society needs that service, but perhaps sometimes you're painted as the villain. And just last week, the UN, 2 weeks ago maybe, the UN Secretary General was in New Zealand and went on to the Pacific, and people asked him about the ban of oil and gas exploration reversal, and he said, the only thing I can tell you is that any oil and gas that will be discovered from now, I am absolutely sure it will never be used. You're exploring new fields, you'd like to explore new fields. What has the UN Secretary General got wrong there? Why do people have this view when clearly you have quite a different one? Yeah,
look, so there is notionally there are enough oil reserves. If we let's talk to the oil side of the story first. Oil reserves in the world to meet potential future demand. 80% of those oil reserves are in Venezuelan bitumen and Canadian oil sands. Now, both those resources are going to be very energy intensive and environmentally intensive to develop. So my question to people is that really, so assuming that you're happy to be covered by, that the oil reserves are covered, we don't have to discover anymore, are you happy that we produce those reserves? Because that's what you're going to have to be relying on. And that's going to be producing a lot more CO2, because ultimately all of that energy that comes for processing has to come from burning things at the temperatures that you need. And it's going to be very expensive oil. So to put that into perspective, there's a thing called the energy return on investment for a barrel of oil. So that's how many barrels of oil you get out for every barrel of oil in energy that you put in. So an oil sands will give you, and Venezuelan bitumen will give you around about 4 or 5 barrels of oil out for every barrel of oil invested. Offshore oil and gas will give you around about somewhere between 40 and 80 barrels of oil for every barrel of oil of energy invested.
So is it fair to say where people are looking for oil, they're not necessarily looking for more oil net, they're looking for more efficient oil?
To be honest, I would like to see a lot of the Venezuelan bitumen and a lot of the Canadian oil sands stay right where they are.
Because they're just going to have more emissions associated with them per barrel than a more efficient well. Okay.
Correct.
And then I guess going back to that idea of displacing dirtier energy, it's better that is natural gas than it is coal or a diesel, which we briefly were burning in New Zealand the other day, to some people's horror.
And we are mostly burning coal. So look, for the EV owners who are really wanting not to produce emissions, they really should. Transpower's got a fantastic site that tells you at any given time in the day what's producing the power. So if the coal-fired power station is running, the reality is that you have a choice over when you plug your battery in. If you plug it in while the coal-fired power station's running, you are the reason the coal-fired power station's running. So all of those electrons you're producing, it doesn't matter who you buy your power from, all the electrons that you're using are effectively coming from that coal-fired power station, because you are the marginal user.
And you are effectively running your Tesla on coal.
You are effectively running the Tesla on coal, which is, look, and a lot of people, if that's really the reason, have a bit of a look at that Transpower app, and you can sort of time when you're actually plugging in.
Because a lot of the time we're not burning coal.
At the moment, with low hydro lakes, it's unfortunately we're burning coal most of the time.
Yeah.
But you're absolutely right. In a normal hydrological year, we are incredibly renewable.
I think you make a good case for exploration, finding more efficient forms of fossil fuels. But let me push back on that a little bit, because every time you find a more efficient well with cheaper, cleaner energy, that makes burning fossil fuels cheaper and cleaner, and therefore reduces the incentive to invest in these big batteries. That the tech's not quite there yet, but maybe people would invest more in the tech. I think some of the idea of the oil and gas ban was not that we don't need gas, but that by banning it we would fast track the development of other technologies. Now that's obviously maybe not the smartest thing to do as a tiny country that isn't capable of developing those technologies, but on a global network scale, if you keep finding cheaper, more efficient forms of fossil fuels, won't that keep us on them for longer and delay the transition?
It's a very good point, Dan, and I think generally as humans have moved forward, and don't forget we are part of a very privileged group who enjoy a Western standard of living. There's a couple of billion people who don't have any who are cooking using stoves powered by dung or charcoal, which causes a lot of health problems as well as probably not being very efficient. So we're speaking from that end of things. Human progress has generally been when things have gotten cheaper and better. So I'm very happy. Look, I will be ecstatic if technology comes along that puts me out of a job. I'm very happy. All those folks in those startups that are developing fusion power or better batteries, I am very happy. Bring it on, because I think that will be a really positive development for humanity. But, we shouldn't be pushing up the price of things simply to try to stimulate something that's not. You could do it more effectively, and one of the most effective ways of doing it would be to put a global price on carbon. Mm-hmm. Yeah, full stop. If we could have a global price on carbon, that would be, and then all governments would then say, look, we'll put the global price on carbon and we'll stop stuffing around with all the other settings. That would be phenomenal. And we would embrace that I know most of the oil and gas industry folks that I talk to would absolutely love that, because it would give you certainty, it would give a level playing field. It would be a really positive thing. But saying that you will restrict the world from having access to a resource that they actually need, and you will push up the world's prices for energy, is a pretty hard thing to do, particularly to the people who, it is the poorest people who end up bearing the problem.
Which is, I guess, what we are to a certain degree witnessing here in New Zealand. Where we tried to push gas out of the system. It didn't work. We have some manufacturers shutting down. We're bringing it back into the system. Ultimately, we tried to make it move faster. We raised prices, but it didn't end up working. That's the sort of thing you're thinking about there.
Yep. And look, it's not. This is not a New Zealand thing. Australia has done very much the same thing. On the east coast of Australia, you're seeing the same argument play out. And that is impacting their energy prices quite a lot as well. Now, we happen to be, you could argue that could be accused of profiteering from that by we've upped our investment in Central Australia, which is gas that's feeding into that East Coast market, feeds into the Northern Territory market, but also the East Coast market. At the same time, that is allowing us to drill more wells. We will try, so we're trying to bring on more supply to meet that demand, because the demand really has to be met. Otherwise, you will shed demand, and unfortunately, you will shed the people. It'll be the people who can't afford it that will end up not being able to pay, or manufacturers being forced offshore. So both those things take away the jobs. They take away people's livelihoods, and I think that's not particularly not a fair way to play.
So you've moved to the ASX. You're having a bit more of a focus on Australia. Can you talk us through just some of the projects, some of the stuff you're doing there, what the market opportunities and challenges look like in Australia and elsewhere?
Sure. Look, we've got we've been investing in Australia over the last three or so years. We bought into the Amadeus Basin, which is right smack in the centre of the country. We've got a couple of gas fields there. We drilled a well in a couple of years ago that's been a solid producer in a field called Palm Valley. We're about to drill a couple of wells in the Marini field towards probably start very first part of next year. That we're looking forward to providing extra volumes into that Northern Territory market. The Northern Territory market, so one of the reasons our production's been flat for the last year has been because the Northern Territory has been suffering a gas shortfall, which has interfered with the flow of gas across into the east coast of Australia. So we've managed to mitigate that, but it has impacted our production in the last year. But we're looking forward to, we're going to put more gas, and we've just had a long-term contract signed with the Northern Territory government and a rare earths miner to put gas into that Northern Territory market for over the next 6 years. So we'll be investing in additional wells, and we're looking forward to bringing some more gas into that market.
What causes a gas shortfall? Is that just less on the ground?
So they had difficulty. So they had a field up in Western Australia that feeds across into the Northern Territory has had a problem with one of its wells, and that's simply meant there's less gas going into the market than was expected. So it's the sort of thing that can happen if you become reliant on only a few sources of fuel.
Because we've had a similar thing in New Zealand, haven't we, where the existing wells haven't produced quite as much as we thought they would, which has added to the energy crunch.
Yep. And look, we've been a part of that. So we have continued to invest in New Zealand. We're by no means turning our back on New Zealand. And we're based in New Zealand for a start, and that's not changing. We invested in the Kupe gas field. We drilled a well. It was one of those disappointing wells. Hoping that we can get something, get more out of it over time. There's some things we can do with it. But the long and the short is Kupe gas field has been a fantastic field over its life. Its reserve base has doubled over its field life without putting any new wells in. So it's been that's a great field to have. It's been producing a lot of the LPG that New Zealanders use for barbecuing and down south for heating, comes from the Kupe field. And look, we drilled one well, and that can happen when you're dealing with Mother Nature. You drill and you get a disappointing result. It's one of the reasons why there is a need to make reasonable returns from the wells that do work. Is because, and sometimes those returns may seem unreasonable, but that's only because you don't factor in all the other wells that don't work. And it is just it's a function of the business. That one well, it's a data point. It's not, it doesn't write a field off. So now we've just got to circle the wagons and figure out what we do next.
Let me ask you about ESG investing. I feel like that's become really big over the past couple of decades, and almost every fund has some sort of ESG criteria they look at. It differs between funds. What is that like for you as a fossil fuel company? Has it changed the type of investors that are interested in you? What is it like being a listed natural gas company in the era of ESG? How is that for you?
I think it's currently, we've gone through a period where it's been viewed pretty negatively. The
ESG or fossil fuels?
Fossil fuels.
Fossil fuels, right.
So
but also
by
ESG,
the investing community.
Okay, right. Yes,
gotcha. But it's one of those trends. Sort of as we've talked about, we see ourselves as actually pivotal in making transition work. And I think that is starting to become a bit better recognised. As that becomes better recognised, I'm hoping that some of those funds will start to say, actually, if we really want renewables to work, we're going to invest in these folks as well. In the meantime, we've been mainly it's the more retail shareholders who have looked at us and gone, right, well, I can see. I mean, if you'd invested in New Zealand oil and gas over the last year, you would have had a 12% cash yield because we've had 4.5 cents of dividend. Just recently announced the 1.5 cent dividend at the end of the financial year. What do they say? It's the short term, it's a voting machine in the markets, and long term, it's a weighing machine. I think I'm hoping that the results that we get actually will, in the longer term, folks will look at it and say, right, well, this is a place that we should invest because we're part of the transition.
One part of the ESG metrics, I guess, are about sort of the ethics or about climate outcomes. But another part, people talk about just risk. They don't want to be left with stranded assets. What's your strategy for avoiding stranded assets or being caught out in the transition? Would you look at going to renewables, or what kind of runway do you think you have?
Look, we've tended to focus on assets where we can invest and get results sooner rather than later. So which puts you into putting wells into existing fields, increasing reserves in existing fields that are connected to markets, where you're not having to put in the long-term, decades-long investment, and then relying on a market being there in 20 years' time. So we're very much investing in a way that says we'll be producing that gas in a year's time and putting it into a market that we know is there and we know is healthy. I think some of the strategic planners in bigger companies would definitely, you'd start to worry if you were looking at a project that was 20 years in the making. Would you do that? Ultimately comes down to what your shareholders want. If you've got shareholders who want to put the money in, well, then away you go. But from our perspective, we've very much focused on things that are nearer term. And then, look, we'll wait and see. I think there's a New Zealand gas market is obviously going to be around for another few decades. The Australian gas market, probably for longer still. So that exceeds any reserves life that we've got at the moment. So that's really been the way we've dealt with that.
Thank you everyone for tuning in. You can watch Shared Lunch on YouTube or follow the podcast on Apple, Spotify, or wherever you get your podcasts. Leave us a rating and tell us what you'd like to hear about next. Enjoy the rest of your week.